All right. Well, Fred, thanks very much. It's a great pleasure to be here and talk to all of you. I see many friends here from I've met over the years. So thanks very much. And let me start my presentation. Maybe what I should do is maybe have a few words before that on the global outlook, because I think it's all very closely tied in. We're in such a highly connected world, and let me talk briefly about the global outlook before I go on to the Asian outlook and look at overheating and then what are the policy challenges. So Fred, let me start by making perhaps 4 main points on where we are globally, because I think that is important as we look at Asia. And what this tells us is what you've heard a lot in the last few weeks. I'm not going to spend very long about it. So from some points of view, the global recovery looks rather good. If you look at the left-hand side of this chart, it tells us that the recovery has probably solidified. Compared to last year, it's probably higher than we thought a year ago in terms of GDP growth. If you look at the right-hand side, it's probable that the range of uncertainty has fallen compared to what we thought last year. But it is also good. Well, as we know, the recovery is uneven, what we diplomatically call multi-speed, which means if you look at how the world is doing, it seems to be growing rather well at 4.5, but advanced economies are growing just at 2.5, and emerging markets are at 6.5. Emerging Asia is closer to 8. So there is a big difference. It is rather uneven. And then if you look at the downside risks, they exist. And our sense today is that those risks are clearly on the downside. And why is that the case? Why do I say that the risks are on the downside? Well, look at the advanced economies. Now, again, you know this rather well, but look at the extreme left-hand side. So in advanced economies, we have obviously high unemployment rates. We know that. The point is that reductions in these rates in the near term is unlikely, as output gaps are not going to close anytime soon in the advanced economies. If you look at the middle chart, you have this fiscal problem. You have a lot of adjustment needed in the advanced economies to achieve prudent debt levels in the next 15, 20 years. And the problem is, if you look at what is planned specifically, it's not really very well planned specifically. So large sovereign funding requirements may well begin to put upward pressure on interest rates. And finally, we know that some banks remain insufficiently capitalized. As we look at Europe, there is probably clearly a weak tail of banks that need to be restructured. So those are some of the reasons why I say the global risks are probably on the downside. And as we know rather well, new challenges have arisen. We know very well about commodity prices. I won't say much about that. There has been some decline in the last week, but they have probably increased more than expected over the last 6 to 9 months. And on the right-hand side comes to the issue I'll talk about more in the next few minutes, and that is a number of emerging market economies are growing at above potential rates, and we know that they are experiencing accelerating inflation, I would say especially in Asia. So let me now go on to the Asian growth outlook. And we know that this is strong. You know, I said emerging Asia should be growing at closer to 8%. And we expect, despite the risks, we do expect economic growth in Asia to remain strong over the next 2 years. What is interesting is that economies with a larger domestic demand base, such as India and China, will continue to lead the region. But having said that, it's important to note that the role of exports remains very important. In fact, I would make the point that the contribution to growth from gross exports is probably going to increase, not decrease, in many regional economies over the next year. Why is that the case? Well, I think it's fairly clear. On the one hand, if you look at the left-hand side, we see that Asian exports continue to benefit from two sources: robust demand for consumer durables and a strong investment cycle, and that represents the performance in both advanced economies and emerging markets. And if you look more closely domestically, we see that on the right-hand side, private investment in many Asian economies will continue to be strong and grow robustly. Why? Well, financing conditions we know are favorable, and corporate balance sheets and profitability in Asia is really healthy. So let's look a bit more now at China, which is becoming a more important source of growth both regionally and globally. And there's a lot I could make points on China. I'll just make two at this point. We all know very well that China's importance is as a source of demand for commodities. The left hand tells us what we already know. It's imports of some commodities. For example, we have here coal and iron ore. The imports have gone up relative to their domestic production. We know that. But I think the more important part is on the right-hand side. We see that as a source of capital, China is growing, and we're talking about both FDI and loans. It is a remarkable development already over the last few years. So let me go back to our concerns now on the quality of what we're seeing. Fred, you've talked a lot in the last couple of years on global imbalances. And our concern now is that surpluses in many of the emerging market countries, the current accounts, such as China and other economies, it's probably going to increase again. We know that it had fallen over the global crisis the last 2 years, but our sense is that global imbalances which had declined are probably now set to widen again. That's the first concern. And the second concern directly to Asia. We know that employment in Asia on the surface has remained strong compared to what we see in the advanced economies. But it's important to remember that vulnerable employment, what we call vulnerable employment, youth unemployment and other sources, this remains higher in Asia than in other regions. And although it's not on the charts, we are concerned that inequalities are now clearly rising in important economies in Asia, such as India and China, among others. And then, as we know, Asia faces new risks from these commodity prices. And what the left-hand chart tells us, that if you look at the effect of, say, higher oil prices on Asia, in a direct way, the impact is actually quite limited. What I mean is, our numbers tell us, if there is now a sudden increase in oil prices, let's even say to as high as $150 a barrel, our assessment is that the impact, the direct impact on growth is going to be rather limited, just around 0.5% of GDP. It's not that much. But if you were to look at the indirect effects, it would be higher, particularly if it affects the global recovery. But Asia is also experiencing high capital inflows. And while I'll come back to that point, the main issue here is we've seen a strong negative correlation between rising risk aversion and volatility and falling capital inflows. And we do have that risk from any instability that we may see in the coming year. And we need to talk briefly about Japan as well, for reasons we all know. It's been a remarkably tragic event that we've experienced. And it's very difficult to even to make an estimate of what the effect is on output. Clearly, the effect is going to be more than double what we experienced with the Kobe earthquake in 1995, and those numbers are now being looked at. Our sense is that as reconstruction spending begins to build up, there will be a recovery next year. But there's no doubt that the effect in Japan on output is severe over the next 2 quarters. But then as we look at the effects in the region and globally, it's interesting to do that, because from some points of view, if you look at the financial effects in the region and the trade effect, is not that much. But it is true that disruptions in production could have ripple effects. And what this tells us is that on the right-hand side, that certain products are especially important for supply chains in certain countries such as Thailand, Malaysia, and Singapore. We know that almost a third of the world's flash memory chips and probably 15% of DRAM supply comes from Japan. So there is the risk of continuing ripple effects from the problems in Japan. So how serious now are the risks from overheating? Because for a while, people assumed that this was external, exogenous, and not a problem in Asia. Well, what do we have? Well, we clearly have an acceleration in headline inflation in Asia. You see this on the left-hand side. It is true that much of this is because of higher food and energy prices. More importantly, what we are seeing is that inflationary expectations are increasing, and there is a spillover into core inflation. What the right-hand side chart tells us is that expectations based on market surveys across Asia have accelerated. And the problem is more persistent, more damaging, and gets more entrenched in countries, in poor countries, which have high food as a share of consumption. At the same time, the point is this is happening when output gaps are closing in Asia. In fact, my sense is in many countries, important countries, China possibly an exclusion, in most others, output gaps have basically closed. And what do we see in policies? Are policies now keeping in pace with the closing of the output gaps? What the right-hand side chart tells us, for example, if you look just at real lending rates, they're significantly below historical averages. If you were to look at just the real policy interest rates, they're probably in many countries still negative. So what does this all mean for inflation? Well, our projections are based on the following. First, headline inflation will probably increase further this year. But if there are no new shocks, our sense is that they will peak and they could begin to decline next year. The point is that in a number of the larger economies, headline inflation will remain elevated at close to or probably above the targets of most central banks. And then were there to be a shock through food and energy prices, it could have a significant effect on inflation. What our numbers tell us on the right-hand side, that let's say there is now another 10% increase in global commodity prices. I'm leaving aside the declines of last week. If there were to be a 10% increase, this would probably have a 1% increase in headline inflation on average in Asia, probably more in countries such as China, India, and the 5 ASEAN economies. And then I think we need to look also at credit dynamics, because it is quite strong. What the left-hand side chart tells us is that these credit dynamics are particularly strong in some economies such as China and Hong Kong, but also in other emerging markets, as you see on the left-hand side. What it means is that credit growth is now probably close to the peaks experienced in previous booms. And what the right-hand side tells us, if you look at the deviations of credit ratios to GDP, the deviations are growing, and it's quite significant for, say, China and Hong Kong. So what does that then mean in terms of the impact on house prices? And what the left-hand chart tells us is that there are probably clear signs of overvaluation beginning to emerge in many economies. We are probably already seeing overvaluation in house prices in Hong Kong and Singapore, perhaps not yet in China, but the movement is there. And as you look at the right-hand side, what we're seeing is that real house price growth is now in some economies not quite at previous cyclical peaks, but it is moving there. And then let's look more at China. So is there a risk of a credit boom in China? That's a key issue that people are concerned about. Well, if you look at the left-hand side, we see that there has been significant credit expansion in China. To some extent, it comes from current account, the trade surplus, from capital inflows, but fundamentally what we're seeing is there has been an expansion in off-balance sheet lending. If you look at the block that is blue, that is called trust company lending. So there is an expansion that's taking place. We are seeing willingness of some banks to evade credit limits, and this could increase the risks of overinvestment. So is this a problem? It's difficult to answer that. What I would say is that there are some important mitigating factors which tell us we should not be over-concerned. For example, I think the authorities are now fully aware of this off-balance sheet activity, and they're trying to deal with it. And as we know, Chinese banks do maintain a very healthy capital position. But most importantly, the point I will make is that China has a relatively low household leverage on the right-hand side. You see, China is on the extreme left of that chart, which means that the decline in property prices, were it to take place, would first be absorbed by household balance sheets. I haven't spoken at the moment much about capital inflows. This has been talked about a lot in recent months, and clearly some economies in Asia are still experiencing large inflows. We know that's the case for Indonesia, Philippines, and even China in the last 6 months through banks. But having said that, overall, capital inflows into Asia have probably moderated in the last 2 quarters. And the reason I say that is to emphasize that the overheating pressures that we are seeing in Asia are largely homegrown and cannot just be attributed to capital flows, which these charts tell us there has been some moderation. So what happens? So what are the challenges and how to deal with the inflationary pressures that are clearly building in the region? Let's look first at monetary and fiscal policies. Clearly, tightening is needed. Why is that? Well, there are many ways to see this. If you take, for example, what the Taylor rule tells us, it is clear that Asian central banks have responded very slowly to these inflationary pressures. You see where, apart from Australia, where the policy interest rates are, the green bar, relative to what is suggested by Taylor rules. And if you look at fiscal policy on the right-hand side, if you look at cyclically adjusted fiscal balances in the region, almost everywhere we see either lower surpluses or higher deficits currently relative to pre-crisis averages. I probably shouldn't say too much on exchange rate policy because I'm sure there'll be questions on this afterwards. But what I will say is that macroeconomic tightening depends very much on what you do with exchange rates. And certainly exchange rate flexibility and appreciation would contribute to tightening monetary conditions in the way that needs to happen in Asia. You may argue, well, this has happened. Yes, many countries have currencies that have appreciated. And it is true. that in many cases real effective exchange rates have appreciated, but they are back to what I would call just back to the pre-crisis level. And in some cases, on the left-hand side, they are still significantly below. And if you look at market pressures, external market pressures, we do see that it is current account surpluses, which is the yellow block, rather than capital inflows, which continues to be the main factor or contributor to reserve accumulation. It's the current surpluses more than capital flows. It's not surprising, therefore, that many economies have undertaken a number of what we call macroprudential measures. Of course, it has been needed because they are looking at asset price bubbles, and in many cases the macroprudential measures they've taken have focused on curtailing leverage and targeting certain vulnerabilities. And I would say it's important they have done that, although it is not a substitute for the macroeconomic tightening. But why do I say it's a good thing? Well, we've looked at the evidence, and what it tells us on the right-hand side is that countries that have been able to put in place lower values of loan-to-value ratios, they have generally had less of a problem in overvaluation in house prices. And Fred, from a last few points, we need to go back and look more carefully in Asia on the problems I mentioned briefly earlier on inequality and the need to build more inclusive growth. This is especially important because in much of Asia we have very low spending in social protection programs. We don't have the kind of social safety nets that other regions have. And therefore, since we are dealing and we are facing rising inequalities, I think they focus on achieving a more balanced pattern of growth has become more important in Asia in recent years as inequalities have gone up, and we know that social safety nets are really quite low. So that's basically what I wanted to say. Numbers are good. Asia's growth outlook remains strong. It will remain in the next 2 years strong. But it is also very clear that overheating pressures have surfaced. And in some regional economies, we do need to be concerned about the risk of credit property price cycles. So we do need a policy mix that is closer to where countries are in terms of their closing output gaps. Macroprudential measures have helped, but they are a complement, they cannot be a substitute. And we need to look at this more fundamentally from a medium-term point of view, because inequalities are rising, there are concerns of quality, and we have to ensure that the growth that results over the medium term, as Asia remains a growth leader, that growth is balanced and more inclusive than it has apparently been in the recent past. Thanks very much.